Hello everyone, my name is Ajmeruddin and this is IPCC Audit and Assurance question paper for old course students of course, and for November 2018 attempt. I have already made a video for the new course with the answers as well, so you can, if you are a new course students, you can refer them as well. Coming to the paper, comparing with the new course, it was quite a direct paper and easy to attempt for me. I can assure you that if you know the provisions, you can hit it and crack it down easily, because it was quite a simple paper to answer, and quite a direct paper. I believe that you all are able to manage it with a glance. But if comparing with the new students question paper, it was a case study based there, and in most of the question there was a case study based, a sort of story was given, then question was asked. It was covered in the 7 pages. This paper was covered in 4 pages, and I believe that this paper was quite a direct. And how is it for you everyone? Just let me know through the comment box. And in this video today, we are going to talk about the suggested answers which you should have written while answering the question paper. So let us begin without wasting any time. First A part was provisions regarding appointment of the auditor. The section number 139 is applicable here, and here for the first auditor, it is appointed by the CAG within 60 days of DOR, and if in the case of failure, then BOD, that means board of director, appoint within 30 days, and in case of failure by the board of directors, members appoint by holding extraordinary general meeting within 60 days, and the auditors who get appointed holds the office till the conclusion of first AGM. Then we comes about other than government company, then it is appointed by board of directors within 30 days from the DOR, and in case of failure, members appoint within 90 days. And subsequent auditor, in the case of government company, it is appointed by CAG within 180 days from the date of commencement of the year, and he holds the office till the conclusion of the AGM. And in other than government companies, it is appointed by the members himself, and the auditors who get appointed holds the office till the conclusion of the term. Okay, talking about the second part of the B part of the question, the company didn't follow schedule 2 lives which were given, so of course they can always disclose in the financial statement about the depreciation method and the useful life if they are different from the schedule 2. Therefore, it is the beauty of the schedule 2 that it allows a flexibility, to have to select the lives apart from the what mentioned in the schedule 2, and you need to give an expert statement on that as well. For talking about C part of the first, the state the requirements relating to audit sampling or sample design, sample size, and selection of items for testing. So for the sample design, when you are designing an audit sample, the auditor shall consider the purpose of the audit procedure and the characteristics of the population from which the sample will be drawn. Talking about a sample size, the auditor shall determine a sample size which is sufficient to reduce the sampling risk, of course, to an acceptably low level. Selection of items for testing, the auditor shall select items for sample in such a way that each sampling unit in the population has chance to get selection. So it is just like a random sampling, but if I'm just taking an example, just like a sampling, so that each class of the selection sample, the population get a chance to get selected. First D part, section number 138, of course the internal auditor is mandatory for every listed as well as every unlisted public company having paid up share capital of more than 50 crores or more, or turnover for 200 crores or more, or outstanding loans and borrowings from the public financial institutions or bank exceeding 100 crores or more at any point during the preceding year, or outstanding deposit of 25 crores or more at any point during the preceding financial year, and every every private company as well where turnover is 200 crores or more, or outstanding loans and borrowings having 100 crores or more. So in this case, not only listed companies, private and unlisted company as well. Second question I skip. Third question, I talk about receipt of capital subsidy. So how will you check? So you need to refer to the application which is made for the claim of subsidy to ascertain the purpose and the scheme under which the subsidy has been made available. Then you need to examine the documents of the grant of the subsidy. Then you can see the conditions which have to be fulfilled, and then you can check the relevant entries of the subsidy in the books of accounts, and you can also check compliance compliance with the accounting standards as well. We're talking about bank balances, so you can take bank confirmation, then you can take bank reconciliation, then you can verify the company's account name, whether everything is matching or not. So you can take various other things as well. I'm talking about sales commission expenditure. So sales commission expenditure can be ascertained, you need to take agreement, if any, in respect of sales transaction and which are actually occurred. So you can check the calculation, you can ensure that the sales have taken place, and you can compare the amount which have been incurred in previous year, then comparing with the total, you can have a broader analysis of what commission rate is there. You can ensure that the payment has been made through through mode like a check only, so that it can it cannot exceed within the tax limits as well. So you can even take care of the tax audit purpose here as well. So these things you can always check for that. Talking about advance to the suppliers, of course you can check the advance from suppliers, taking confirmations from vendors, and you can in the subsequent year, if after 31st March there is a supply advance of the supplier, on the 31st March there is advance for two suppliers, subsequently they must have settled and subsequently the goods must have come. So you can check the subsequent entries as well. Talking about fourth A, state the disadvantages of audit program. In this case, the work may become mechanical for those for mechanical for the audit assistant for them, or maybe for the partner as well. The work may become mechanical and particular parts of the program may carried out without understanding the objective of that part. It becomes so mechanical, so repetitive task that you forget about the objective. You just do audit as the program says. The program often tends to become rigid and inflexible, and when it becomes inflexible, it tends to get inefficient. It tends to get inefficient, and another thing it is that it is hard and fast program. If it is a hard and fast program, it may kill the initiative and innovativeness of the assistants which are participating in the audit. Okay, talking about fourth B, as an auditor you have examined the books and debt of the company, give some incidences which lead to doubt upon recovery. So the instances which increase the doubt about the unrecovery of debts or loans. So the terms of credit is always, if it always getting ignored or repeatedly get ignored, then it creates a doubt. There can be a stagnation or lack of healthy turnover in the account. Payment are being received but balance is continuously increasing. If we talk about interest or the principal part, old bills are there which are pending, which are unfulfilled, and which are not fully settled, partially settled are there. Debts are under litigations or dispute. So collection are uh, barred under statute of limitation. So these are the things which takes up the significant doubt about the program. If you are talking about the audit program, if you are creating an audit program for NGO, you must consider corpus fund audit. You must consider the items, basically corpus fund, reserves, earmarked funds, loans, fixed asset, project agency balances. These all things you must importantly consider while you are planning an audit program. Next, we talk about fifth A, discuss with reference to essay 230 factors affecting forms and contents and the extent of the audit documentation. So of course the size and complexity of the entity, nature of the audit procedures to be performed, and if you have already identified risk of material misstatements, then you need to consider that as well. The significance of the audit evidence which have been obtained, and the nature and extent of exceptions which have been identified by you. Next, we talk about fifth B, Alpha Limited intends to maintain a books of accounts in electronic form. You need to write down section number 129 here, with also with respect to the rules which have been formed there under. You can have books of accounts in electronic form if your company if your servers are outside India. So it also should be stored servers in India periodically. So these all things you must write. So it was quite a manageable question, I believe. And then let us start in the sixth A part explain the circumstances in which option on the share arises. The option on share capital schedule 3 of the Companies Act 2013 requires the disclosure of particulars which of any options on the unissued share capital. So an option on the shares arise when a person has acquired a right under the agreement with the company to subscribe for the shares. For example, if you have ESOPs or and any other thing, when the tenure and when the terms get complete, then the right arises. Such options generally arise under the circumstances like under promoters agreement subsequently ratified by the company. Collaboration agreements are there, loan agreements with the debenture deeds, other contracts such as supply of capital goods and or merchandise are there. So these are the circumstances. And then if you talk about say state 6 important advantages of audit of accounts of partnership. So here you can write broadly, this is a generic question, but you can write audited accounts provides convenience and reliability, that the partners have settled their accounts accordingly, and on the retirement or the death of the partner, audited accounts are very much important, and they serve as a reliable data evidence. And audit statements of accounts are relied by the bank as well, and when advancing loans to the partners or advancing loans to the business. An audited statement of accounts can helpful in negotiating to admit a person or as a partner, in case of admission of a partner. So audited statements always serves and helpful in negotiation the amount of capital he must take to the company. Thank you very much.